Good morning, everyone. Thank you so much for joining us for a very topical conversation with our Director of Growth Equities, John Belton. I'm just going to give a quick intro before John starts. My name is Janice Musselwhite, and I've been with the firm for 20 years, and we're thrilled to be here, again, supporting Morningstar with a top-tier sponsorship this year. John joined GAMCO as Managing Director for Growth Equities in January of 2024 and serves as Portfolio Manager on the Gabelli Growth Fund, the Gabelli Global Growth Fund, and the Gabelli Growth Innovators ETF. He was previously a partner and research analyst at Absoluto Partners, a fundamental research-driven long-short equity investment fund where he focused on technology, media, and telecom and consumer sectors. John holds an MBA with honors from the Columbia Graduate School of Business and a BA in mathematics from Boston College and is a CFA charter holder. John has 13 years of financial industry experience. And now I'll turn it over to John to dive into a timely topic and help us to explore investment opportunities in the infrastructure AI market.
All right. Thank you, Janice. Nice to be with everybody again for my second consecutive year at the Morningstar Conference. As Janice mentioned, I'm John Belton, and I manage our growth strategies at Gabelli. So last year I gave a talk on generative AI, and I kind of talked through the basics. What is the technology, who are the players, and how do the different parts of the value chain link together, from semiconductors to data centers to applications. This year I think I'm going to give an update on the industry. I'm going to talk about how big the investment cycle has gotten, where we are in that cycle, where are we seeing adoption of the technology, who's generating returns, and what are some of the use cases that are emerging. That is me. Okay, here we go. So let's start with here's the size of the industry. So it's officially fair to call the generative AI infrastructure buildout a $1 trillion buildout. So this looks at CapEx spent by the 5 largest builders of AI infrastructure, which are Microsoft, Meta, Google, Amazon, and Oracle. And collectively, these 5 companies have now spent over $1 trillion in CapEx since 2019, much of that towards generative AI infrastructure. And not shown on this chart is another group of companies that are also investing aggressively in generative AI. Companies like Chinese internet platforms, Alibaba, Tencent, ByteDance, neo-cloud companies like CoreWeave, vertically integrated model companies like xAI, Apple, Tesla, et cetera. So ton of investment going into this technology. And the investment is accelerating. Growth in this investment is accelerating. So these same 5 companies expected to spend or have communicated CapEx plans to Wall Street this year, which collectively represent $330 billion of CapEx, up about 40% year on year. Here's the numbers. So $330 billion expected this year. That's, for reference, about the size of the GDP of Egypt or Portugal. It's up almost $100 billion year on year. So it added the GDP of Croatia or Panama from last year. So enormous scale and still growing at extremely robust pace. Really no peak of the investment cycle in sight. It's not just the public markets. It's not just these big public companies that are spending massively on AI infrastructure. Similar things happening in private markets. This is one measure. It's valuations of 7 of the largest private AI companies. Just this group alone, recent funding rounds value at over $500 billion. That's up 2.5x year on year. And so I think the question is, there's so much investment going towards this. Where is it all why is this happening? And so I think there's a few different reasons. We're going to start with the fact that adoption of major consumer AI applications is only now really starting to inflect. So this looks at weekly active users for ChatGPT. Now remember, ChatGPT launched over 2.5 years ago. It's not a new service, but the adoption of ChatGPT is only now starting to really inflect. And I'm going to show this chart in a slightly different way here. This is the time it's taken ChatGPT to add the next 100 million weekly active users. So it took ChatGPT about a year to reach its first 100 million weekly active users. It took about 9 months to reach the second 100 million. And over the last few months, they've been adding about 100 million weekly active users per month. So we're really hitting a steep part of the S curve, or the adoption curve, for a service like ChatGPT. And it's not just ChatGPT, obviously. So this is a bunch of different usage metrics for other major generative AI services. I like the top one, Google Gemini's tokens. So a token is a measure of an AI model's output. It's roughly equal to one English word that an AI model returns when it's queried. So it's a great measure that shows how much an AI model is being used. At the annual developer conference last year, Google CEO Sundar Pichai disclosed that its Gemini family of models is currently generating at a pace of 5.8 quadrillion tokens per year. That's up 50x year on year. So Google Gemini usage up 50x. Similarly, Microsoft Copilot, a slightly more niche productivity suite of generative AI models, 600 trillion annualized pace of token generation, up 7.5x year over year. So point being, similar to ChatGPT users, we're seeing adoption really, really spiking for the major services. And so the big investment dollars, they're chasing adoption. They're also chasing returns. And so I'd say the biggest investors in AI infrastructure are already generating really big returns on their CapEx. And this is particularly coming in two different use cases, which I'll get into in more detail here: digital advertising and cloud computing. So starting with digital advertising, it turns out digital advertising is just a perfect use case or a perfect application for generative AI and the major platforms. So back to the big five companies we talked about earlier, three of those of the big five are the three largest digital ad platforms in the world, as many of you probably know, in order: Google, Meta, and Amazon. These companies are using generative AI to improve their content recommendation algorithms, to get the right content in front of users, to get them to spend more time on their platforms. They're using it to improve ad targeting. They're using it to improve ad measurement. And increasingly, they're starting to use it to do the creative part of ads. They're using it to automatically generate advertisements. And so this is an interesting quote from Mark Zuckerberg that he gave at their first quarter earnings call a couple months ago. His vision for what Facebook is going to be on the advertising side because of generative AI is just a one-stop shop. They're going to abstract away many different steps of the digital advertising process, and ultimately a advertiser will go to Facebook and say, with a goal, say, I want to grow my sales by $1 million this year. I want to add 100,000 users. I want to drive 100,000 new visitors to my website, whatever the case may be. And Facebook will price that out. They'll create the ads. They'll find the users. They'll deliver the right ads to the right users, and they'll report back how effective the campaign was. So I think Facebook and Google and Amazon, a lot of this AI investment is going towards improving and making more efficient their core digital advertising businesses. And we're seeing that in the numbers. So this is just Facebook or Meta and Google. These two companies alone are expected to do about $440 billion of ad revenues this year. That's up from $300 billion in 2022 when ChatGPT was launched, for reference. So adding $140 billion of high margin advertising revenue as they've been aggressively investing in AI. A lot of that is thanks to the investments they've made in AI. And it's showing up in market share as well. So combined Google and Facebook or Meta share of global advertising spend, it's now approaching 50%. Market share, interestingly, had started to level off in 2022, 2023 in the low 40s, as they've, again, aggressively invested in building out their AI capabilities. Market share has re-accelerated because the amount they've been pouring into AI, it's not rivaled by their smaller peers. So 3 of those big 5 companies generating significant returns on AI CapEx and digital advertising. The other big killer commercial use case for generative AI so far has been cloud computing. So again, back to those big 5 companies, 4 of those 5 operate the largest cloud infrastructure services platform globally. And in order, those are Amazon, Microsoft, Google, and Oracle. And it turns out AI has had 2 big impacts on these businesses. So first of all, AI represents a brand new revenue pool, leasing AI infrastructure to third parties. But secondly, and I think more importantly, AI has catalyzed a re-acceleration in core cloud infrastructure businesses, because companies globally have realized that in order to get the full benefit of AI, they need to move their IT to the cloud immediately. They need experts to be managing this IT so they can get access to the latest computing technology, the latest computing kit. And so similar to and here's a quote from Andy Jassy, Amazon CEO, from their earnings call, their fourth quarter earnings call held earlier this year. And he's just making the point that, again, the point I just made, companies must move to the cloud to get the full benefit of AI. So that's really benefiting these public cloud platforms. Those big 4 public cloud companies, Amazon, Microsoft, Google, and Oracle, collectively going to generate about close to $300 billion of public cloud revenues this year. That's up about $60 billion from last year. So it's huge growth at enormous scale. And similar to the digital advertising point, we've seen revenues across these companies re-accelerate as AI has become a bigger part of the pie. So again, I'll make the point again, the companies that are spending the most on AI are generating the best returns on AI so far. So a lot of this spend, it's really justified, it's rationalized by attractive return on invested capital. So we've got big investment dollars chasing inflecting usage and already attractive returns for a couple big commercial use cases, but there's also a lot of new use cases that are starting to emerge. And so there's a group of use cases that are already starting to commercialize that are small but growing rapidly. And then there's a number of further use cases that are a little bit further out in the future that I'll touch on. So first point to make though, before getting into the details here, what's causing this broadening out of AI use cases? There's 2 things. One is AI is becoming, the technology is becoming more efficient. It's becoming cheaper to access and cheaper to use. And the second is it's becoming more capable. So on the first point, AI technology becoming cheaper to use. This is a study done by Stanford University a couple months ago. And it looks at model inferencing costs. So the costs of using an AI model. Stanford found that inferencing costs on average across the industry are down about 300x by a factor of 300 over the last 3 years. And clearly that has not resulted in fewer investment dollars being put towards the AI. It's just it resulted in more people using AI and AI being rolled out to more use cases. Similarly, AI capabilities improving rapidly. So this is benchmarking against the dotted line. There is human capabilities or a human baseline across a bunch of different disciplines, including image recognition, reading comprehension, language understanding, science and math. And all those disciplines now are at or above human capabilities in terms of the benchmarking tests for the major models. Look, we can see the really steep improvement in science and math in particular, those really steep lines towards the right there. And so as AI is becoming cheaper and more capable, the vision is that it's just going to be used in more and more corporate productivity initiatives. And it's going to be used as, in many cases, a labor replacement across enterprises in all different sectors and in all different parts of the enterprise. So this is an interesting quote that NVIDIA CEO Jensen Huang gave last month at an annual developer conference. He thinks that this better, more efficient AI and more capable AI is unlocking the chance to address a $50 trillion global pool of labor costs. And we're seeing that idea of AI used as a corporate productivity pool, as a labor replacement, come through in recent survey work. So this is a survey done a couple months ago by McKinsey. I guess it's maybe a little bit hard to see here, but I'll summarize the findings. So among the survey respondents, which were executives across companies in every sector, 50% of respondents are already using AI to cut costs in areas including supply chain, HR, strategy, operations, legal, and software development. And 60% of respondents are already using AI to generate incremental revenues in areas including strategy, marketing, operations, and supply chain. And so one way that big enterprise software companies are starting to go after this labor opportunity is the launch of what they're referring to as agentic software applications. So these are software applications that can autonomously and automatically perform and complete tasks end to end without human supervision. And one example here that I like is a company we own in our portfolio, ServiceNow. ServiceNow is the global leader in IT service management software. They've launched a suite of so-called agents to automate a lot of the things that their software addresses. So their agents can do things like automatically generate case summaries. They can automatically diagnose IT problems. They can automatically recommend troubleshooting tips to the user that queries the model. So ServiceNow's agentic revenues are tracking towards close to 10% next year. So not a massive part of their business yet, but clearly a big, exciting source of new growth for the company and for the industry at large. Beyond agentic software, I guess more of a targeted use case, but software development, another very compelling use case for AI that's already in commercial, it's already being commercialized. So CEOs of Alphabet and Microsoft have recently said they estimate AI is already generating 30% of all of their company's internal code base. Meta thinks that, Mark Zuckerberg thinks that's closer to 50% today. Microsoft CEO Satya Nadella sees that going to 95% by the end of the decade. So the role of a software engineer, of a software developer, is just changing with AI. Another interesting use case that is very recently entering commercialization is autonomous driving. Tesla formally launched their unsupervised robotaxi service in Austin, Texas last week. Tesla fully uses camera vision and AI for their autonomous driving. And if we look at their system called Autopilot here, it's now drivers using Tesla Autopilot have 10 times fewer accidents per million miles than the US national average. So it clearly works. It's maybe not quite as safe as it has to be to gain widespread adoption yet, but the direction of travel is very clear. Autopilot miles per accident has improved 160% over the last 5 years or so. So we've got emerging use cases entering commercialization, as we discussed, in various areas of corporate productivity, agentic software, autonomous driving, software development, and there's no shortage of other additional future use cases that are starting to be worked on that are very promising in areas like industrial and humanoid robotics, various pockets of healthcare, drug discovery, protein sequencing, diagnostics, and then in defense as well. So the investment dollars are going towards the fact that adoption is really spiked. They're going towards the fact that there's a couple killer use cases already generating significant returns, and they're going towards these promising new use cases on the horizon. So I guess I'll just summarize the presentation with 4 points I want to leave you with. First, this is a $1 trillion investment cycle officially, and it's showing no signs of peaking. Second, adoption and usage is really only now starting to hit this very steep part of the so-called S-curve, even though we're 2.5 years after the launch of ChatGPT. Third, the largest investors in AI infrastructure are generating the most attractive returns today. And fourth, as usage costs decline and capabilities increase, the set of potential use cases in production and in commercialization is expanding. These are just some of the names that we own in our Gabelli growth portfolios that participate at various layers of the AI value chain. And with that, I will open it up to Q&A. Yeah. Yes. I can repeat the question. Oh, we have a microphone there.
The chart you showed earlier about Tesla and its autopilot software with the number of crashes. I would expect that if it's as good as this trend line is saying it is, why is this so volatile? Wouldn't it just be going straight up? Like,
I
why
think
would
there's
it actually?
there's seasonality there.
I
So
see.
during the winter months, there will be more accidents. During the rainy months, there could be more accidents. So yeah, it's just seasonality.
So I understand the more accidents, but again, if autopilot is making fewer accidents, even with that seasonality, shouldn't it still be doing better on a, I mean,
Now remember, this is miles per accident. So going up is safer, right?
right, but
And so I think that some of the jumps you see could be when they roll out a new version of the software, as an example. So I think there are certain step function improvements along the way. It's not necessarily continuous improvement. It's with each software update, it gets better.
and then one other question on the token data that you had shown before. If I understand what you said correctly, the token represents, let's say per word is
Sure.
a token, something like that. If these agents become more verbose, isn't that a way to just get the data to look better?
Sure. Yeah, I would say token is not necessarily a perfect measure of utility. I would say it definitely is a good measure of usage. So sure, like as the context window expands in a model, yes, that's going to artificially help the token generation for sure. But I think that it's more direction of travel was the point I was trying to communicate. These tokens.
So with the technology nature of the AI, do you see it can be another reason to adopting the private market?
To adopt, say it again.
The private market. Because
So-
the nature of the technology itself, typical companies start small in the private market. For example, SpaceX is a good example.
So can AI be a catalyst for more capital to flow towards private markets?
Right.
Is that the question?
Yeah, pretty much.
Yeah, I think it's a fair question. So we look at these are the 7 of the largest currently valued private AI companies. Now, I think I would probably say not necessarily. I think a lot of these companies are going to have to go public because the capital needs of these companies are so enormous. So you can fund a lot of that in the private markets, clearly, but will OpenAI ultimately go public as a way of getting better access to capital? I would argue yes. That is almost a foregone conclusion. Timing unclear. The other companies here like XAI, I think my view is that will probably ultimately be merged into Tesla would be my, I don't know the timing on that either. But so I do think that what's for sure is the capital intensity of generative AI is massive. These companies are going to need significant access to capital. Is that going to come from private market or public markets? Probably a little bit of both, but I think the biggest companies will eventually be better off going public. That's my own personal view.
A number of leadership teams kind of across the spectrum here have kind of hinted at this idea of like sprinting towards what they call superintelligence, right? The idea that they're going to achieve a model so amazing that it just excels at everything, which becomes a total winner-take-all scenario. Number one, do you believe that to be true? And number two, if you believe it to be true, who do you believe to be best positioned to achieve superintelligence or at least something like it?
Yeah, I think that's a broad term, superintelligence. And it's a little bit hard for me to comprehend what that's going to look like. And I guess the precise definition is the answer to the question depends on the precise definition. I think clearly what you've been seeing most recently, there's a real talent war going on for AI talent. You've got these headlines over the last couple of weeks that Mark Zuckerberg is offering 9-figure signing bonuses to big AI engineers. They're being paid like, professional athletes, which, so clearly this talent war, they're going after something that looks like superintelligence. And it seems like it's probably many years away. I personally think that a lot of the industry there's going to be a couple big platforms that service smaller vertical solutions that address specific industry-specific use cases. There will be a winner in back office enterprise. There will be a winner in legal. There will be a winner in factory automation, things like that. So who's best positioned? I mean, I think OpenAI right now, they seem to have kind of run away with the consumer market. I think that positions them very well. I think the large tech companies, Microsoft, Google, and Amazon are also pretty well positioned with the enterprise. So, all right. Thanks everybody for your time. And if anyone wants to talk anymore, I'll be over at the Gabelli booth right over there. So thank you.